Alrighty, guys. So I looked at the stocks I hold, and clear as day, the biggest winner chicken dinner here today was Alibaba. The next closest stock to that was Honest at a 3.9% move today. But yeah, Alibaba, massive move, nearly 8% up for this stock here today, $74 a share. So there's several components of why Alibaba stock popped huge today. Okay, several components. First one of many is Alibaba stock surges after Jack Ma and Joseph Tsai, I can never pronounce his name right, buy $200 million worth of company stock. Alibaba stock soared 7% on Tuesday after the New York Times reported that co-founder Jack Ma had been buying shares in the company. Ma and Alibaba chairman Joseph Tsai both had been buying shares, the report added, citing people familiar with the matter. Ma, who stepped down as Alibaba's executive chairman in 2019, but remains a major shareholder, purchased about $50 million worth of Hong Kong traded stock in the quarter, the report noted. Tsai bought around $151 million worth of Alibaba stock in the fourth quarter through his Blue Pool Management family investment vehicle. Alibaba itself bought about $9.5 billion worth of shares in 2023. Don't be surprised if they buy a ton more in 2024. Alibaba, once one of China's best contenders to become a trillion-dollar company, saw its shares obviously trade below IPO price last week. Don't be surprised if Alibaba is a trillion-dollar company again in the future, okay? It's just not today. So that's massive. As a new shareholder of Alibaba, somebody that just started buying the stock here, I'm very happy to see this. Very, very thrilled. I like it when folks that are very knowledgeable in the company, as knowledgeable as you can possibly get, which obviously Joseph and Jack Ma are, I like to see when they put in their money where their mouth is, right? And they're out there buying shares. So this is phenomenal. I think that's massive, 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 okay? Second big thing that happened here is this. Chinese stocks surge on market rescue report plan. Chinese stocks rebounded as authorities reportedly mull rescue efforts for its long-ailing financial markets. Hong Kong Hang Seng surged, while Chinese stocks that trade in the U.S., such as Alibaba, JD.com, NIO, Xpeng, BYD, rose solidly to strongly. Chinese policymakers are looking to tap about $278 billion, mostly via Chinese state-owned enterprises, to buy shares onshore via the Hong Kong exchange, link Bloomberg reported, citing sources. They are also planning some 300 billion yuan in local funds to invest in onshore shares. That comes as the Premier Li urged forceful steps to buoy stock markets. Authorities also mulling other options, could announce at least some initiatives as soon as this week. So this is obviously the Chinese government realizing the stock market's in a lot of trouble in China. Their stocks are in a lot of trouble. And the problem is, when it comes to Chinese stocks doing so bad, right, it gives a perception that China is doing very bad. It gives a perception that the government there is doing very bad. This is like what it always ends up coming back to. Like if the stock market goes down, let's say the U.S. stock market, let's just say the U.S. stock market. If the U.S. stock market goes down 50% next year, who are they going to blame? Are they going to blame the Federal Reserve? Are they going to blame companies? No. You know who they're going to blame? The President of the United States. Even though the President of the United States has very little to do with whether the stock market goes up a bunch or down a bunch, that's who takes the blame. And so if Chinese stocks are all doing bad, if the Chinese stock markets are all doing bad, who does it come back to? Xi Jinping. You're the problem. You're the reason the stock market is low. And so suddenly the government has to take steps and realize, oh my gosh, we're losing credibility. Everybody's looking at us. We're bad in this situation. And they feel like they have to do something, okay? This is the way the game is run. And so now the Chinese government is starting to realize, crap, man, like this has been going on. I mean, Chinese stocks have basically been going down for 3 years. And at some point in time, you got to put your foot down and say, enough is enough. And I believe I was reading last night that the Japan stock market just passed the Chinese stock market in terms of market cap, which is something that shouldn't even be possible, just to be quite frank, when you look at how small Japan's population is versus China. That is no way that should happen. And how powerful the Chinese companies are compared to the Japanese company. That should never happen, but it's happened. So they realize they got to do some things here. Obviously, that's something that's at least short-term good for Chinese equities, right? Then this happened. I thought this was bigger than the potential of them flooding money into the market. I thought this was much bigger. NetEase 10-cent jump after China regulator removes gaming rules draft from website. This all came out in the past 24 hours. Crazy, right? NetEase and Tencent were among the stocks that surged on Tuesday after China's gaming regulator removed proposed draft rules for the online gaming industry from its website. The link that proposed draft rules on the website of the National Press Publication Administration was not accessible on Tuesday. Now, why is this massive? The reason this is massive, it's not just about, oh, this helps NetEase and this helps Tencent, and so maybe if those stocks are in indexes, it pushes up other stocks. No. The reason this is so huge is this is one of the first signs, one of the very first signs, extremely important, that the Chinese government is starting to take a step back and they realize, oh my gosh, we're way over-regulating, we're way hurting our companies, the perception of our companies, the investment opportunity in our companies. We've got to take a step back here because we're doing way too much damage, way too much collateral damage to these companies. Is a very positive signal, extremely positive signal. This is China saying, we've gone too strict here, we need to let off because this is too much, too far, and it's clear as day. It's crazy it took them this long to start to realize this, right? But at least they're finally realizing it. And so now this is a stepping stone to actually making China investable again, a huge stepping stone in the right direction. Now, on top of that, Xi Jinping, right? I told you guys when he came to the United States a couple months ago, that was the first big sign that I said China's serious about recovering their stocks, their stock market, their financial markets, and their economy. That was the first major step in my opinion. Well, the first major step was actually them finally opening back up their economy in 2023, toward the beginning of 2023. The second big step was obviously Xi Jinping coming to the United States a couple months ago. So Xi Jinping now and the Chinese government in general, they're realizing they have to play nice or they're going to have no fun in this situation. They got to be friends, not bullies, to their companies, because if they do that, they're just going to hurt themselves. They're not going to make themselves investable. And if they make themselves not investable, they're going to be in a world of hurt. Let's just put it that way, a world of hurt. So they realize they've made a lot of mistakes over the past, I would say, 4 years, and they're starting to clean up their mess. It's going to take a while. It's going to take several years to really clean up their mess, but they will clean up their mess because they have no other choice than to clean up their mess. There is no other choice. There is no other option. It's either clean up your mess or you're not going to be an investable country, and at the end of the day, you're just going to wilter away. And that's not acceptable for Xi Jinping or the government in general. So, yep, things are moving in the right direction. Now, do I like what's going on here? And the answer is yes and no. The problem is Alibaba is a relatively new position for me, right? And I got $16,000 roughly in the stock, 222 shares. I wanted to build this up to about a $50,000 position or so, and before the stock started to move huge. So I'm hoping Baba calms down a little bit here. Maybe just everybody's excited, and maybe the enthusiasm fades a little bit. I'm hoping that kind of happens because Alibaba was kind of a position I was thinking about adding aggressively for the next 3 to 6 months. So we'll see what happens here. As of right now, I'm still a buyer of Baba, but if the stock was all of a sudden up 30, 40, 50%, maybe I pull back at that point in time in terms of the amount of shares I'm adding. But for at least right now, in the very short term, it still is a buy, no doubt, okay? So good news, things are moving in the right direction in regards to that, okay? China is in some real trouble, folks. I want to go ahead and go through some of this new information out of China here. Talk to you, tell you about how it makes me feel about Alibaba stock. Obviously, I just started buying Alibaba stock. Does this make me want to sell Alibaba, buy more, or just hold what I currently have in kind of Chinese stocks in general? So it's really bad. China strategist warns of deflation and rock bottom consumer confidence. I've been in China for 27 years, and this is probably the lowest confidence I've ever seen, says the founder of China Market Research Group. He told CNBC today. He forecasts that China will experience another 3 to 6 months minimum of a very painful economy. The world's second largest economy has faced slower than expected recovery in 2023. Deflation may soon start biting into Chinese growth as Beijing looks at another 3 to 6 months of a very painful economy, according to one analyst who covers the country. Quote, "This is something investors need to be cautious of. The economy here is bad." That's how he puts it. The economy is bad. It's really bad, he says. It's really bad. I've been in China for 27 years, and this is probably the lowest confidence I've ever seen. That's a big statement. So deflation is starting to wield its ugly head. Consumers are waiting for discounts. They're very nervous. Linked to a decline in the prices of goods and services, deflation is generally associated with an economic slowdown, raising questions. And if you look back at the great financial crisis in the United States, we actually did have some deflation during that time. It's very rare it happens, but it does happen. You're in usually really tough times if you ever see deflation. Raising questions over the growth outlook for China, whose post-Rona recovery has already fallen short of some expectations in 2023. In December, depressed prices for pork, which makes up around a fifth of China's CPI basket, heralded the possible advent of deflation. Deflation is a serious issue. I know the Chinese government doesn't want me saying it, but it's an issue and we need to worry about it, he says. So I am kind of surprised that they kept the prime rates unchanged. You know, it would have been nice if they had lowered them to try and get some stimulus into the country. Yes, I'm surprised at that as well. I would think, it's time to maybe stimulate a little bit. Maybe. Earlier on Monday, the People's Bank of China held its 1-year and 5-year loan prime rates at 3.45 and 4.2% respectively, in line with forecasts. These are the pegs for most household and corporate loans in China and are one of many levers that the PBOC usually pulls to in an effort to stimulate the economy. The decision comes amid infectious expectations among investment banks that China's economy will expand at a more sluggish pace in 2024. Beijing has set an official growth target of 5% this year. Now, you guys got to wonder, right? You're hearing about the reality in China, right? You see many of the biggest Chinese companies struggling for growth rates, right? And you hear somebody like this saying it's the worst he's ever seen in 27 years. But then you have the Chinese government talking about 5% growth and things like that. This is why people don't trust the numbers out of China. This is why, folks, okay? Now, the premier in China told the World Economic Forum in Davos, Switzerland last week that the Chinese economy swelled by a marginally higher 5.2% in 2023. Really? They grew their economy 5.2% in 2023? Okay. At the time, Li highlighted that China did not achieve its economic development through massive stimulus and did not seek short-term growth while accumulating long-term risk. Rather, we focus on strengthening the internal drivers. Now, also, from me personally, from what I've heard from several different folks that I know that either do business in China or have ties to China, they don't have good things to say about what's going on in China either. So, no one has anything good to say about China right now. That's the bottom line with this, right? And yet 5% plus GDP growth, okay. Despite this, the Internal Monetary Fund in November outlined a forecast for China's growth to slow in 2024 to just 4.6%. In the more recent January 15th report, Moody's assessed that China's real GDP growth would hit 4% this year, and in 2025 from an average of 6% between 2014 and 2023. Economic slowdown is widely seen as a potential threat to Xi Jinping, whose Chinese Communist Party has cultivated national political legitimacy through rapid growth. I don't know. Even if the Chinese economy is not doing good and sentiment might be the lowest in 27 years, I don't think that's much of a threat to Xi Jinping, just to be honest with you guys. That man has things pretty where he needs them there. Yet Rain says that Beijing may stomach a slight rough time as long as the economy retains 5% growth, as the administration focuses on social transformation. The Communist Party of China doesn't necessarily want a restructuring of the economy. They want a reform of society. So it is much bigger picture, which is why I don't think the government is going to want major stimulus. So the new normal is going to be 4 to 5% growth over the next 3 to 5 years, he said. Ooh, that's intriguing. That's an intriguing thought. I don't think you're going to deal with another 3 to 6 months minimum, I think you're going to deal with another 3 to 6 months minimum of very painful economy as China restructures, or as China, transforms its economy toward a more slower growth, fairer society. I don't know if that really makes it a fairer society, but whatever. Among the more tremulous sectors of the Chinese economy, Rain identified the country's once bloated real estate market, which I've been probably talking about the Chinese real estate market problems since I got on YouTube in 2016. It's been a long time, which accounts for roughly a third of China's economic activity, has been tumbling sharply since Beijing broad stroke crackdown on debt levels of the mainland property developers. Real estate giants Evergrande and Country Garden have become key casualties in the clampdown. Buyers think housing prices might continue to drop, so even if there's pent-up demand for housing, a lot of home buyers are telling us we're not going to buy this month, we're not going to buy this quarter, because we're scared prices are going to drop another couple of percent in the coming months. Such a consumer behavior could compound some expectations that China could take more than 10 years to liquidate the current overhang of its housing inventory rate, which would put it into a, even a situation worse than the great financial crisis, just to be honest, in terms of how bad our housing market got hit in the United States. Many markets, there were some markets that coming back from the great financial crisis, they recovered in, about 3 to 5 years. There were others that got hit harder that took more toward 5 to 7 years, some close to 10 years. Here in Vegas, for instance, if you look peak to trough, it was about almost 10 years. So China's talking about, even being as bad as it was in our worst markets here. Now, how does this make me feel overall? Okay, as somebody that just started buying Alibaba stock, obviously a Chinese stock, right? And, all those sorts of things. So when I look at an Alibaba, it's clear as day the sentiment is about as bad as you can possibly get the sentiment in this stock, right? This stock peaked way back in 2020 at $300+ a share. And ever since then, it's just been in a downward slide, and the sentiment just got worse and worse and worse for really 3 years now at this point in time, right? I don't see it getting much worse than this, just to be honest. And the way I look out there, I say, okay, from what I'm hearing from people I know personally, they say it's horrible in China. When I see folks like this that are, more like experts in the market, they say this is the worst they've ever seen it. If anything, that makes me actually feel more comfortable buying into a market where they're talking about it's the worst they've ever seen. Because my thought process is it's just a matter of time before things bottom there. Now, a gentleman was talking about they might not stimulate for a while, those sorts of things. I don't know if I buy that. The China I know has always been very quick to stimulate, and so I think it's just a matter of time before they want to get things back on the right track, they get their growth rates back. The thing with China is they have a massive amount of people they're trying to get to the middle class right now. And when I say massive amount, I'm talking about several 100 million people over the next decade or so they want to bring into the middle class, right? If you're going to do that, you need a very strong, healthy economy. That's how people get into the Chinese middle class. By having big companies that are very successful, they're doing a lot of hiring, those businesses are creating more businesses, and at the end of the day, it comes down to capitalism, right? And China might be communist, they might be this, they might be that, but the reason they've grown so immensely, the middle class that they have currently, and the reason every company that's, a respected company, whether it be a Starbucks, an Apple, everybody wants to do business in China if they could. Meta would love to do business in China, but they're not really allowed in China like that, right? Google would love to do business in China, but they have trouble being in China outside of the Android product they have, right? Everybody wants to do business in China because they've grown their middle class substantially over the years. And the way they keep growing that middle class and then have that middle class keep, let's just call it levering up over the years is by having a really healthy economy. And so the more unhealthy economy is, the more you're going to potentially run into problems if you're Xi Jinping. And think about it, right? If a lot of people are unemployed, youth unemployment's been insanely high recently for the past year or so in China, right? I think 25% plus from what I've seen. If you have that, you have a lot of people become more unstable, right? And they start looking around, and they want to get whoever's in office out of office, right? So you start having more problems from the bottom up that start to erode, and then pressure gets put on local governments, and then pressure gets put on bigger government, and kind of breeds up from there, right? And it creates a lot of problems. And next thing you know, you end up in a whole situation. Now that's where the potential of war comes into play, right? And people are looking at China, Taiwan, and they say, well, if the economy is really struggling, maybe they want to, put some people into battle in that sort of situation. That's always a potential. But China's never come across to me like they really want any conflict. They might say this, they might say that. They're going to try to be protectionist. They're going to try to be defensive. But they've never come across to me like they really want big problems, and especially with the United States. And the problem is, if they do something in Taiwan, there's a high probability they're going to have some major issues with the United States. And they really can't have issues with the United States because the United States is still so key. And to be quite frank, the United States, we don't really want problems with China either. And the reason we don't really want problems with China is China owns a ton of our debt. A lot of our companies get a good portion of their earnings out of China. They're also still, even though we've tried to wean ourselves off of China, China is still the manufacturing place in the world. I mean, they still make the majority of stuff that we get as products, right? And so both countries still kind of need each other. So I don't think China really wants to have any sort of big problems. I don't think the U.S. is. So you're likely not going to have any sort of warfare situation. So if you're China, the only way to get growth and keep society at bay, right, is have strong economy. Because like I said, when people don't have jobs, things start getting crazy. Look at what happened in the United States in 2020, right? You had obviously the unemployment rate go up substantially. People were stuck at home. And look at everything that happened during that time period. Next thing you know, you had riots. You had all types of protests and this and that going on, right? You had cities being looted and stores being looted. And I mean, it was one of the craziest times, certainly in the United States, we've ever seen in 2020, right? That's what happens to a society if you want to keep them locked down for a long time, if you want to put them in a situation where they don't have jobs, right? If everybody has jobs and they're busy working and going out to the restaurant and living life and things like that. If all of a sudden no one's working and they're waiting around all day, they start thinking, why is my life like this? Why can't I have this? Why is this way? And, that's where problems, come through. So my opinion is they're going to stimulate before it's all said and done. They'll get things moving back in the right direction. And companies like Alibaba will thrive because of that. So, but we'll see. We'll see how it all plays out, folks. Okay. All right, guys. Appreciate you joining me as always. Thanks so much for being here. Thank you for being subscribed. Yeah, I got a free video for you. It's going to be pinned comment down there. Exactly how I plan to invest in 2024. It's about a 45-minute video. That will be pinned comment. Make sure you watch that video. It's going to be very helpful to you. Much love and have a great day.